Good morning, everybody. Thank you for joining us. My name is Kurt Knoll, the Director of Member Relations here at Barnabas Foundation. And joining me today on today's broadcast is Lindsay Canan, one of our newest estate planning attorneys. That's joined our team just 8 months ago or so, Lindsay?
It's
right?
been 8 months. Eight
Yeah.
months, yes.
Fantastic. Just a couple housekeeping items before we jump into today's content. If you have questions throughout today's broadcast, feel free to type them into the Q&A section at the bottom of the Zoom screen. It'll come up here and we'll address those as we can. If there happens to be any particular question that's going to take a little bit more time or require some more information, we'll be happy to discuss with you, taking that offline and following up with you afterwards. Today's session will be recorded as well. So if you have family, friends, or acquaintances that you would like to share this recording with, you'll be able to find it next week at barnabasfoundation.com/interactive, where, by the way, you can find prior recordings of other Zoom sessions that we have done like this in the past. So for those of you who don't know who Barnabas Foundation is, for 46 years now, we have worked in connection or in partnership with ministries around the country in providing plan giving expertise to their supporters and to the firms that we worked with. And over the years, we've worked with thousands of families across the country, thinking about ways to give to their favorite ministries in different ways. And sometimes that is through their estate planning and the gifts through their will or trust. And other times there's opportunities during lifetime to take advantage of other types of gifts rather than just writing a check. And that is really what today's topic is all about, is non-cash gifts, and primarily different ways to give that'll actually provide additional tax benefits that you may not really be acquainted with. And so, Lindsay, I just want to start off with the first question. What are some of those popular ways that supporters have given to their favorite ministries that we've worked with over the years?
Yeah, so Kurt, I'm really excited to talk about that question today, because I think as we are heading into the holiday season, right, and we've got Thanksgiving around the corner and Christmas coming up, our supporters and donors are thinking about, gifts to family and friends, but also ways that they can bless ministries and charities that are close to their hearts. And so I think traditionally, when they think about making those type of gifts, they're thinking about gifts of cash, or, even pulling out the checkbook and writing a check to their favorite ministry. But what I want to talk about today is some other type of gifts that they can make that really have some tax advantages and can make good tax efficient gifts. And those are essentially gifts of non-cash assets. And so what I wanted to touch on today is really some of the more popular non-cash assets that our supporters can give. And as you see on the screen here, these are gifts of publicly traded stock, gifts of real estate, gifts of even cryptocurrency, and then also business interests. And these type of non-cash assets can really make fantastic gifts that are very tax efficient for our donors. And now I do want to point out that to be a good and tax efficient gift, these assets really need to be two things. First, they need to be appreciated, meaning that since you've acquired the asset or purchased the asset, that it has grown in value. So that's something we need to look for with these gifts, that they've grown and that they've appreciated in value. But secondly, that these type of assets have been held by our donors and supporters for longer than a year. And the reason for that is by holding those assets longer than a year, you are locking in that long-term capital gain nature of the asset that's really going to provide the most tax efficiency. So again, looking at non-cash assets, stock, real estate, cryptocurrency, and then business interests. And one thing I want to point out, if you are a business owner and you are looking to make a gift of a business interest, but your business is taxed as an S corporation, the tax laws are a little different for that. So we would encourage you to reach out to our planning staff and sit down with one of our planners, and we'd be happy to talk about making that type of a gift. But otherwise, again, looking that these assets are appreciated, held longer than a year, are really going to provide some key benefits.
Yeah, fantastic, Lindsay. And even though we've gone through kind of a volatile year in the markets where or prices have come down a bit from their highs last year, there's still a lot appreciated hidden inside these assets. As you pointed out, most of these things have to be held. They have
Yes.
to be owned longer than a year. And so many of these investments that perhaps you're sitting on in your portfolio, you've held for a long period of time and have still significant appreciation. And so if you have charitable endeavors that you are hoping to fund this year, it may be the right opportunity to still talk about that and look at those assets as potentially giving. So you touched on the different types of things. So what are these benefits? What are these tax benefits and other benefits that are come about from giving these assets rather than just writing a check?
Sure. Yeah, there really is some great benefits that I want to talk about. So the first one is not necessarily the tax benefits, but just the fact that giving these type of assets, these are typically widely held by our donors and supporters. So these are readily available assets where you can look at your total portfolio or look at your total estate assets and look at ways to give that, again, are not constricting your cash flow. So not necessarily having to write that check from your checking or, taking cash out of your savings account. You can look at other readily available assets that you as a supporter or donor own to be able to make that gift. So that's really the first benefit, right? Is going beyond the checkbook and looking at your total estate in order to give. But then we're going to look at also really the key tax benefits that you're going to get. And those benefits are first, a immediate charitable tax deduction based on the fair market value of the gift. So you are going to get that tax deduction by making the gift. And then second, there's going to be elimination of capital gain. So we talked about these assets holding them longer than a year. If a donor was to sell that asset and then want to gift the sales proceeds, they are going to pay capital gains tax. But instead, by gifting the asset directly to charity, they can eliminate and avoid paying that capital gains tax. So the donor's not going to pay that. And also the charity's not going to pay that tax. So really, we have some key tax benefits by gifting these non-cash assets. And then lastly, I just want to touch on too that for our donors and supporters, that even if they are not itemizing on their tax return, so even if they're taking that standard deduction, they're still going to get tax benefits from making these type of gifts because of that elimination of the capital gains tax. So really some key benefits. And I wanted to just briefly share a story of a donor that I met with recently who owned some stock well, it was a husband and wife actually, owned stock in their portfolio. And this was a health insurance stock that they had purchased in the 1990s. And as you can imagine, having met with them recently, this stock had significantly grown in value, and they were looking to gift with this stock to bless Christian education. And we talked about in the meeting them selling the stock and making that gift, but they would have significant capital gains tax to pay. So instead, what we talked about is gifting that stock, that non-cash asset, directly to their favorite ministries and charities and eliminating the capital gains tax. And what that does is just significantly impact the amount of that gift, right? Because that tax isn't getting paid. So not only the tax benefits, but I think just the ability to further impact and bless the charities and ministries close to your heart by taking advantage of these non-cash asset gifts.
Amen to that. And this capital gains tax is not an insignificant number, folks. This is 20% plus usually of your gain. So you have $100,000 gain, you're looking at paying $20,000 in taxes on something that you were to sell outright versus just making that gift. So double win, full market tax value deduction for the value of the asset given, and the avoidance of the capital gains tax that's embedded inside the gain that's sitting there. What are some of the other ways that supporters might make gifts to their favorite ministries that can also reduce taxes besides these capital gains type situations?
Sure. Yeah. So, we touched on these non-cash asset gifts, but there really is some other wonderful ways that our supporters can give. And the first one that I want to touch on is gifts from an IRA account. So those supporters that have an individual retirement account or an IRA, they can make what is called a qualified charitable distribution direct from the IRA account to their favorite ministries. And I should say that these type of gifts are for supporters who are 70 and a half or older. And again, it has to be direct from their IRA to their favorite ministries. But by making these type of gifts, these QCD gifts, these are going to be excluded from taxable income for the donor. And it also is going to count towards satisfaction of either all or part of their required minimum distributions. So if you're a donor that is having to take those RMDs every year, you can make this qualified charitable distribution direct from your IRA account. It's going to count towards satisfying part or all of those RMDs. And then lastly, I should note that the rules allow for you to gift up to $100,000 per individual per year from your IRA. So you can make a gift of up to $100,000 direct from your IRA to charity, to ministry, and have such a huge, substantial blessing and impact on the kingdom. And again, you're not going to have that count towards taxable income. You as the donor are not going to pay tax on that gift, and the charity as well is not going to pay tax. So a real significant gift can be made. And then next, Kurt, I want to touch a second on gifts of commodities or gifts of depreciated machines, equipment, and property. So if we have donors or supporters today who are farmers, these can be fantastic gifts. And these type of gifts are going to reduce your taxable income. In gifts of depreciated property, if you were looking to sell that property or those machines or equipment, instead of selling it, you could gift those assets and not pay the ordinary income tax that you would have on the sale of those. So again, gifts of commodities or depreciated property can really reduce that taxable income and also make some very good and tax efficient gifts. And then last, Kurt, I'll talk about some gifts that pay income. So some of our supporters are looking to make a sizable charitable gift, but they also might need an income stream. And these donors can enter into what is called a life income agreement. And this type of a gift, you make a large or sizable gift, enter into this life income agreement, and it is going to produce an income stream for either a lifetime or a term of years. But entering into this type of agreement, making this type of gift is going to generously support the charity upon death or upon the end of that term of years. You're also going to get that immediate tax deduction for making that gift. So if there's donors or supporters today interested in making a large gift, but also need some income, they should think about one of these life income agreements. And please reach out to our planning staff. We would be so happy to sit down with you and talk about these type of gifts and talk about the rules behind them, but really work with you if you're interested in this.
Thank you, Lindsay. So much fantastic information there. We could unpack this for a couple hours if we really wanted to dive into it. But there's tremendous opportunities to make gifts of appreciated assets that we've kind of touched on the first part. The second part was, wow, there's some other things out there that perhaps I should be thinking of. IRA gifts, the ordinary income types of things like farm commodities and the like. And then these gifts, these life income gifts are just tremendous vehicles. And I'll tell you, over the years, it's been fun. I've been with the foundation now for 16 years, and I've seen so many fun gifts that come along the way. Yeah, we get lots of stock, and we do some real estate, and we've done everything from apartment buildings and cottages and second homes and first homes and farmland and industrial buildings and the like. But there's been lots of different commodities out there. So if there's any farmers out there, really be thinking about this. We've done fruits and grains and eggs and cattle and you name it, we've done it. Lots of farm machinery gifts, lots of other several other business related equipment gifts over the years. So if there's something you're thinking about that might be sitting there that you'd just like to talk through, we're here to help. That's what our expertise lies in. Paul, we have one question come in, Lindsay, and it's from Paul. He asks about how is the tax deduction determined? Is it at the time when the charity sells it, or at the value when it's received? It is at the value when it's received. And so all tax deductions are based on the market value at the time that you make that gift. For some things like stocks, it's very easily and readily determined, right? Because we have this open and closing price on the stock and so forth. Most other things beyond $5,000 require an appraisal, and we would help you through that process and making sure you're getting the proper appraisal done so that you can qualify and justify your tax deduction on your tax return. That's part of that expertise that we bring to the table and deliver. So Lindsay, some of the folks who we're talking to today, there's a number of donors on the call today, been invited by many of our member charities that we work with, and they support more than just one charity. And so, as I'm a donor, I'm thinking, is it really efficient for me to send a stock gift or a real estate gift to 5 different charities, or is there a way to do this more efficiently and effectively?
Yeah, and Kurt, that's a really great question. And there is a way that our supporters can streamline their giving. And we here at Barnabas Foundation, we have what is called our Stewards Fund. And the Stewards Fund is essentially Barnabas Foundation's donor advised fund. And this is an excellent tool to be able to not only reduce taxes, but also increase flexibility in your giving as a donor. And so if you are a donor who is looking to bless multiple ministries, what you can do is set up a Stewards Fund account here at Barnabas Foundation. And you can make one sizable gift to that Stewards Fund account, and in turn, then receive one tax receipt. So you're making one charitable contribution, getting one tax receipt. That's really going to simplify that. But also, you can then direct Barnabas to make grants to those ministries, charities, organizations that are close to your heart, and you can choose the timing on that. And so you direct us when to make that gift. So it's flexible, timing wise, it's up to you. And you can make the right grant at the right time based upon your schedule. And then also there's tax benefits too in making these type of gifts. Like we've talked about, that immediate charitable tax deduction, elimination, avoidance of those capital gains. So, you're getting simplicity, streamlined giving, tax benefits. The Stewards Fund can really be a great way to support multiple ministries and organizations that are close to your heart.
Excellent. And all of you that are watching today, or those that may watch this as a recording later on, as a member or supporter of the many member ministries that we have that are contributing members to the foundation, being able to talk to Lindsay and the rest of our planning team you're available to you at free, and it's free of charge. There's no cost. These many ministries partner together with us to make this service available. So you have this kind of expertise to talk to an expert like Lindsay, and as I mentioned, the rest of the planning team, to just think about these decisions before you sign any documents or made any commitments. And so if you have those assets in your portfolio that perhaps are become burdensome, the rental properties that perhaps you don't want to manage anymore, but you really love the income stream, or you're afraid to sell it because you don't want to pay that capital gains tax. Or maybe you're thinking about making some commitments to a capital campaign and you want to talk through what is the best way for me to fulfill that commitment in the next couple of years. Or maybe we got a windfall coming, right? We got a business transaction coming, or we just had a windfall year of income. And you want to talk about how best to take advantage of the tax deduction that are allowed under the code, but you're not ready to commit those dollars to other charities just yet, or perhaps you want to give it to them over a period of time. The scenarios are endless. There's lots that we can talk about and lead you through to find the best path for you. And that's what our service is all about, is helping you find that path. And so as you're thinking about these things at year end and these charities that you love to support, know you have this resource here to talk to. And you can reach us at 888-448-3040, or you can reach us at planning@barnabasfoundation.com. Either of those will connect in with our team and put you, in connection with one of our planners to start the discussion. That's what we're here for. We're here to help. So feel free to reach out and talk to us about anything you might have. Be sure to beat the year-end rush. Some of these things do take a little bit of time. So if you're thinking about something, better to call us sooner rather than later. We have done some crazy transactions right at the last couple of days of the year, but they can get a little squirrely to try to get them finished because sometimes there are some documentation that does have to be put in place. And so if you are thinking about something that's not as liquid as stock, be sure to call us sooner rather than later so that we make the deadlines for 12/31 to get your deduction into this year. And that's our broadcast for today. We're here to assist. We're here to help. Thank you, Lindsay, so much for joining us today and sharing your expertise. And we look forward to continuing to serve all of you out there, donors and or member organizations, as we go into this holiday season. Be blessed. Thank you so much for joining us today. Bye-bye.